Hi everyone, welcome to yet another episode of Dhan webinar. So today we have with us a very special guest. So we have Mr. Anil Ghelani with us, so who heads passive investments at DSP Mutual Funds. Welcome Anil to Dhan webinar.
Thank you very much, Jay.
It has been our pleasure to have you in our office.
Thank you.
So before we get into the technicalities and discuss in detail about everything, so we'd like to understand from you how this entry into this mutual fund industry started. So could you just share about your journey with us?
Sure, Jay. So, my entry into the mutual fund or asset management industry was very interesting. I was earlier in auditing and taxation background. I'm a CA first by education.
Okay.
So I was involved in the standard audit taxation practice. And while doing that, many of the clients that I was auditing, they were in asset management and broking business. So I developed a keen interest on that front. And at that point of time, I'm talking about like early 2000s.
Okay.
And maybe it was just some kind of a way in which I was looking at the companies and their growth. I just thought that maybe asset management as a business would grow well in the future. So let me move, and I joined asset management industry.
Okay.
And just to summarize, and then the journey, what I realized then is that I would need a little bit more knowledge relevant to this industry.
Yeah.
Why I'm sharing this so that your viewers and your users of your platform also can be clear that as a young professional, you can choose your path, and then very important to navigate smoothly and accumulate or gather more relevant skill set for that. So what I realized that my CA related education was superb and extremely powerful, but to create an edge, I needed something different. So I pursued my CFA, and I got my CFA charter. That helped me a lot in terms of navigating better and gaining more deep insights in the world of investing, analyzing companies. So that helped a lot, and that's how it shaped my career over the last about 2 decades across multiple functions in the mutual fund industry.
Okay, that's wonderful. So how do you see the difference? When you started your career, mutual fund was a very different business. Less of awareness,
Yes.
Today you have mutual fund Sahi Hai campaign going on.
Correct.
So could you share the difference then and now? What all things have changed in the industry?
So first and foremost, as you said, technology has been the main driver for change. Like today, sitting in the comfort of your home or office or your college, wherever you are, you can watch this engagement with Jay and me, and such rich experience from Jay also, or you can get access to data information so easily. Earlier in the day, at that point of time, that was not there, and hence little bit less awareness what exactly are mutual funds. It was small industry also. Though capital markets were of course very large and vibrant, broking industry, equity capital markets, debt markets, but within that mutual fund was still small. I feel that during this past couple of years, more so in the last I would say 5-7 years, this has changed significantly where the awareness has increased. Along with that, our regulators have also been very prudent, so they have ensured very large levels of transparency, which gives a full access to of information to investors and gives them full information in a very easy to understand manner.
True.
So I feel that with these kind of things in place, the mutual fund industry is on the cusp of a huge growth.
Correct.
And that is beneficial for investors, whether you are a retail investor sitting in a small city, or you are a very large HNI or a corporate investor looking to park your surplus funds.
Correct.
So I feel this is the one very big change. As the mutual fund industry has grown, today we are close to about 40 lakh crores in size across multiple products, spread across risk and return spectrum.
True.
The way in which this growth has happened, that is on the bedrock or a foundation of very stable regulatory framework,
yes.
which ensures that now in the next, let's say 5-7 years, when there is a huge surge in the growth, both in terms of number of investors participating and the size or the AUM, it will result into a very vibrant industry.
Correct. You rightly said, So we also see that, in terms of capital market as well, the way the regulator is working, it's phenomenal,
Correct.
They are ahead of time, the leap of faith they take, in disrupting the industry and also making it grow, making it, multifold, that hats off to the regulator and their, way of functioning in the country. Yeah. So, now coming back to, your current role. So you are heading passive investing there.
Yes.
So for the interest of our audience, could you just elaborate what passive investing is about in simple terms?
Sure. When we talk about passive investing, structurally what it means is that we are trying to buy the overall market. So when we talk about, let's say, active investing, we are trying to select from within the market and exercise the judgment with a view to beat the market. Okay, so classic form of investing, like, if you go back to history, many of you might have studied it in college or in your MBA program, like, classic form of investing, you have read The Intelligent Investor by Ben Graham, trying to understand company balance sheets. So what the fund manager or analyst does is that does a top-down review and then does bottom-up stock-by-stock research, analyzes the company and decides whether to buy or not to buy that company using what? Judgment, research analysis.
Correct.
That is the so-called secret potion.
Yes.
So little on the lighter side, I keep always highlighting, like, there was this one very famous movie called Kung Fu Panda. And that panda's father was making a very good soup, and they said, I put some secret ingredient. Nobody knows what exactly secret ingredient is, but yes, in this case, it's a research element of a judgment of a human. Now, in passive investing, we remove that secret sauce. It's only about the way in which you invest. So the judgment part or human bias is eliminated and you buy the whole market.
Correct.
So in some way, when we look at passive investing, it becomes hence a rule-based investing. That at the time of selecting your particular investment theme or your particular index, a lot of research and review and all is done.
Yes.
Once that is done, then no human bias is involved.
Correct.
By default, you keep allocating and investing with that particular rule in place.
Correct.
For simple example, let's say today, if you were to invest into a Nifty 50 index or ETF might be. So there is a predefined set that, okay, these will be the top 50 companies by free float market capitalization, typically which are leaders in their sectors, and they will come and sit in this portfolio. Now, on top of that, I will not apply my human bias or judgment. Okay, last couple of weeks I have been observing that, hypothetically speaking, auto sales have been very upbeat. Results of auto companies are coming good. Maybe I'll go a little bit overweight on few auto names. No, not like that. I will stick to that particular formula and keep investing in line with that index. So that is the what we call as the classic form of passive investing, where no human bias or no judgment of a research or fund manager is involved.
Yeah, no, that's a super illustration. No, just to add, I also am a fan of, this index investing, because what also index investing does is it weeds out the, weaker companies from the index. So if we see, like, in the last 6 years, the composition of Nifty has changed. There have been a lot of weaker companies which have moved out of index, but still index has given a decent return. For someone, who doesn't have time to track markets, that's a fantastic way, because the whole system filters things out for you. So you have only the quality companies which remain in the index. Yeah, so that's one. So we also keep on hearing about that when you invest in index funds, you pay a lesser expense ratio. So is it only the TER which you should look into, or there is something more to it?
See, when you are investing into a ETF, that time instead of TER, we should look at what we call as TCO, total cost of ownership. So in that, what we capture is that TER is there, of course. In addition to TER, you add on all other implicit and explicit costs. For example, let's say when you are buying the ETF, there will be some small brokerage attached. There will be some bid and offer spread. There will be some kind of a frictional cost when you are coming in, going out. So all that put together will become what we call as your TCO, total cost of ownership. So it's a very different concept now. As you said, over the last 2 decades, with so much awareness about mutual funds, TER, everybody is aware with. TER means total expense ratio of your mutual fund. That is perfect. But for ETF, little bit we need to add on some of this cost. But yes, if you are, let's say, otherwise investing into an index fund, then TER is effectively your total cost. You can be comfortable with that, But other than that, yes, otherwise TCO is a good concept to keep in mind about.
So just for understanding, so since your TER is very less compared to active funds.
Yes.
So the TCO is an element of cost which is
Yes,
added
it's
to
also,
TR,
but
right?
still TCO is also much lower only.
Okay, okay.
If you look at TCO also and
Yeah.
compare that with the total or TER of an active fund, it's much lower.
Okay.
But just as a concept, I'm just highlighting that TCO is a concept which for ETFs is very important to look at.
Okay. So Anil, if you can just also share your views on how this index investing or investing in ETFs can help a trader basically. How can they do?
Yes.
How can they create strategy
Sure.
around it?
Yes, so in fact, good point, and I feel that as a trader, you can use ETFs in very unique ways.
Okay.
2-3 points I'll just highlight
Yeah,
very
sure,
quickly. So
sure,
first
yeah.
and foremost, let's say there is a very simple basic ETF called liquid ETFs.
Okay.
Now in liquid ETFs, what happens is that the underlying is into very short-term overnight securities.
Okay.
So there is no mark-to-market involved.
Okay.
So it becomes like kind of a steady allocation of your money,
Right.
which let's say if you have to place margin, instead of leaving it in a FD or in a cash, you buy liquid ETFs, place it as a margin, it's permitted as an acceptable margin also,
Okay.
and on that you take a leverage or you take a a facility for trading.
Okay.
You can either do trading in options or shares or whatever you feel.
Okay.
That is a basic use case that don't leave cash idle, park it into liquid ETF, use it for margin.
Okay.
And then whenever suppose you want to convert that into share also, you can just sell it and in lieu of that buy shares, trades on T+2 basis like any other ETF.
Okay.
Other than that, let's say there are many very unique ETFs. Let's say there are some sectoral ETFs.
Okay.
Let's say you have a ETF on just for example bank Nifty ETF
Okay.
or auto ETF.
Okay.
And let's say if as a trader you are having a view on one such sector,
Okay.
so you can use the ETF in a very good way to either take the long side of that exposure, or if you have some stocks in the long side, you want to hedge it out and just short, So these kind of trading strategies can be very easily used.
Okay.
Or another example, many times investors use it. If let's say on a day there is a very big event,
Okay.
suppose today is budget day
Okay.
or election results day, and market can be up or down in a big way potentially, then what certain strategies where you are using let's say some derivative futures and options strategy, on the other leg of that you can use let's say for example a Nifty 50 future to maybe hedge that position.
Okay.
So in a way, ETFs being easily tradable in and out with intraday pricing, one can use them very well for such kind of trading strategies, and very good benefit can be derived from that.
Okay, okay, that's interesting. I think for listeners out there who are also traders, this gives a very good insight for them. Just to add, Anil, one more thing that recently there has been a SEBI circular where ETFs also are now eligible securities for margin trading facilities.
Yes.
That also gives an advantage.
That's
to
a
someone.
big advantage. Yes. Very good point. Recently only that has come up.
That has come up.
So you can very easily have purchased some ETF, let's say Nifty ETF, and then use it as a margin, and on that take your other exposures. So yes, it can be very useful for that. Yes.
So Anil, I'll come to another very interesting point. There are two schools of thought in investing world. One says that you do active investing. That means you identify stocks, you do your research, and you beat the benchmark indices or whatever. So the whole objective is to generate that alpha return. So there is other school of thought which I also advocate is for any newcomer who gets into the market is in index investing or rather passive investing. But for somebody who is less than 30 years of age, and if you see the demographics of the new entrants who have entered the market during this COVID period, is that majority of them are less than 30 years of age. Correct. So for them, investing in something which is very passive, which doesn't chase a benchmark, where there is no alpha kind of return, it may not appeal to them. So what would be your advice based on your experience of more than 20 years? How a youngster should use this tool or the way of passive investing to their advantage?
Sure, very good point. I'll try to highlight in two areas. First and foremost, I think you're right that today many new investors, especially who have started investing in the recent years, they might be looking for something exciting, something exotic.
Yes.
So what I would suggest to such investors is that you should try to split your investing portfolio into two parts.
Okay.
Let's say one is your core portfolio and one is satellite portfolio.
Okay.
So let's say, for example, in your core portfolio, hypothetically out of 100 rupees, let's say you decide that 30 rupees, 20, 35 rupees, 20 rupees, I will have a core allocation. That let's say you keep low cost, plain vanilla ETF.
Okay.
Well, let's say Nifty 50 ETF or Nifty equal weight 50 ETF, and just keep it lying idle over there.
Okay.
And that you continue for an ongoing basis as a core.
Okay.
Then on the satellite allocation, you maybe split it into some direct stock specific investing,
Okay.
or some this kind of strategies that we spoke about, some trading strategies.
Okay.
You know, or you consider to buy some kind of a little differentiated ETFs which have the potential to deliver alpha.
Okay.
Like what we call as sometimes, you know, factor ETFs or smart beta ETFs.
Okay.
So their investor also feels something कि yes, मैं कुछ अलग कर रहा हूँ या कर रही हूँ. I am getting some different allocation in my portfolio. Let's say, for example, different factors. Let's say there is some factor. Let's say, for example, quality as a factor.
Okay.
Maybe using quality filters, selecting a portfolio from the overall universe, or momentum as a factor.
Okay.
You know, so those can be used as your satellite allocation.
Okay.
While some core allocation is there parked in your plain vanilla Nifty 50 or Nifty like kind of a ETF.
Okay.
So that way, investor can get combination of both.
Yeah.
With the low cost ETFs, you buy it, let's say, and park it over there. So that gives you the market returns.
Yeah.
And then on the top of it, in a satellite allocation, you try to express your view or take some trading calls, something like that.
Okay. Okay.
And second point, as I said, like, you know, I talk to many young professionals or many investors in our fund also and all that very often. And what I have seen that, you know, structurally by and large, okay, you find it interesting and passionate, then you be in this field in a whole time level.
Okay.
But if you are not in this profession,
Okay.
then at some time you will have to give that away and focus on your core area. Suppose I am a young doctor.
Correct.
Okay, let's say in the same example, 30 years of age. Okay, now when I'm talking to that doctor of 30 years of age, maybe he or she has recently got a baby, planning to say, okay, in next 10 years I want to have a bigger clinic, you know, focus on that. Maybe you're right. Maybe in the last 2 years during COVID and lockdown, said, चलो, so everybody is doing investing. मैंने भी धन में जाके मेरा डीमेट अकाउंट ओपन कर दिया, ट्रेडिंग अकाउंट खोला, मेरे नाम पे है, हस्बैंड के नाम पे है, हम लोग थोड़ा बहुत इन्वेस्टिंग करते हैं. Very good, I appreciate that. Maybe my core expertise in pharma, so I have got some good pharma stocks because I have a grip on that sector. Okay, do it. But after that, you will not get time because you have to focus and spend time on reading your latest magazine of your medical science.
Correct.
Not seeing where capital market are going on, like you mentioned, latest SEBI circular.
Yeah.
So for such investors, which I believe are quite a large number of investors like that, what I would like to say is that you first look to meet the market. Yes. Just they want something exciting to beat the market. Then you think of how to beat the market.
Correct.
Come to the capital markets, come to Dhan platform, you open a demat account, trading account, buy simple low cost ETF, which will help you to meet the market. The core allocation.
Okay.
Then little bit where you get some time, some pharma stock you added as a satellite allocation, okay, do it. But otherwise don't keep chasing the next big bang stock which I will identify. That is not going to serve you. You focus on building your core profession of doctor. Exactly. I mean, such that your financial goals can be met by doing this kind of thing. That is how I would like to highlight.
Lovely, lovely. That's a very interesting illustration. So, just to simplify that, you need to have two-tier kind of model. First is that you create your base.
Correct.
You know, where your index investing or passive investing really helps. And in case if you want to chase alpha, you have, you know, further capital allocated to it, you know, where you can use your own research or do your experiments.
That's right. That's right.
Yeah, that's great. Yeah. So now, since Anil, you are here, you know, we cannot allow you to go without asking these questions. Like, you know, since you are in this industry, you have been a CEO and CIO of DSP BlackRock erstwhile. So now you are heading a passive investment at DSP Mutual Funds. You have seen cycles, right? You have seen the big bull rally of 2003, a crash of 2008. Then you have seen the COVID fall and, you know, the one-sided, you know, secular rally post that.
Sure.
So now there is a lot of buzz around that, you know, we are heading towards a global recession amid this Russia-Ukraine war. So there are very few days left in this 2022 now.
Sure.
So how do you see 2023? Is it going to be a bad year? You see sideways movement? What's your take on that?
Structurally, if, you know, on the lighter side, I'm just saying,
Yeah.
nobody, if I was able to predict 2023 December, 1 year from now, how market will be
Correct.
or what we'll be doing, then
Yeah.
maybe, things would be very different. I would be sitting on some island in Mauritius and just trading on the platform and making money.
Yeah.
But still, as a profession, it is our responsibility to give some direction about how we are seeing the future. So I'll just highlight one or two key areas what one should be looking at. Structurally, what I believe, let's say last about 18 to 20 months have been a period whereby post the peak of the pandemic crisis in 2020 of March, we have seen a unique positioning where combination of central bank and central governments have been doing monetary stimulus as well as fiscal stimulus.
Correct.
In the previous crisis of 2008, more so it was monetary stimulus.
Yes.
Here we had a unique situation where almost world over about 128 countries approximately were doing combination of monetary stimulus and fiscal stimulus.
Yes.
So at some point now, both of these engines have got heated and they need to slow down.
Yes.
We have already seen it little bit happening, whereby some fiscal stimulus is going down, monetary stimulus is getting
squeezed,
constrained,
yeah.
and central banks are very prudently taking measures which will ensure that happens.
Correct.
So I feel in the next, let's say 6 to 12 months, we will be in that phase whereby many of the central banks, of course, they have in some form or fashion already done a lot in this last year, whereby let's say many central banks have raised interest rates. So now they will be measuring very carefully the rising inflation and raising rates, at the same time the growth in the economy, so as to not suddenly impact the growth of the economy as well.
Correct.
So I feel it will be very country specific. Certain countries will be in a very good shape,
Okay.
especially countries like India, where we have got a good domestic consumption based economy.
Economy, yes.
Some part of the global macro headwinds, if I may say it that way, will remain. Possibly it could remain more as a mental apprehension in mind rather than being implemented on ground.
Correct.
Why I say that is that today, for example, US, we have seen in these last 9 months of 2022, like from March 2022 till to December, we have seen US Federal Reserve raise rates from 0 to now 4% basically. Now, would we have ever thought of that maybe 1 year back, if suppose we would have met last year in December?
Yes.
No chance I would have spoken that basically. Nobody would have thought like that way. But yes, it happened. Did it have some catastrophic impact on Indian economy or Indian capital markets? None of the two.
None of the two, yeah. Correct.
But in theory, if suppose one would have discussed, कि अच्छा what happens if let's say US raises interest rate by 4%, तो सब बोले अरे बस दुनिया खत्म हो जाएगी. For example, just I'm saying on the lighter side. So there are certain elements of shock absorbers in overall pockets of different parts of our economy, which of course are linked with global economy, no doubt about that. So some of the global linked sectors and companies have been under a little bit of a pressure, but by and large, I feel that we will remain in a good state. If you look at companies' earnings, if you look at certain sectors which are going to be good drivers, like for example, banking as a sector, it has been a little bit lackluster, but now we feel there is a good pickup.
Yes.
They are in sweet spot, rising interest rates. So next couple of quarters there will be a kind of a good net interest margin. The rates on their lendings have gone up, but the deposit rates will slowly catch up. So good margins are there. They have a good opportunity to earn decent spreads.
Correct.
And as a part of the economy, they are a big component. So they will add to the overall earnings growth.
Yes.
Hence, capital markets also will be in a good shape.
Good shape.
But will we see a replay of let's say 2020? That Indian equity markets is up 50%, 70%. I doubt.
Yeah.
One can't predict specifically, but we'll have to have a calibrated approach.
Correct.
Certain sectors and certain stocks will do extremely well.
Correct.
So coming to the original question, maybe using this kind of a core and satellite model.
Yeah.
Some core allocation, just park it into broader market in low cost ETFs.
Yes.
Leave it over there. Let's let the market take the shape.
Yes.
And some of the satellite allocation using, let's say, good platforms like yours.
Okay.
Keep allocating, keep taking some trading strategies or some sectoral bets, and have your overall portfolio of core and satellite to grow basically.
Wow. That's quite insightful. Yeah. Great. Yeah. So Anil, lot of interesting discussions we had. So let's come on the lighter side of it.
Sure.
Now, So So how does a fund manager like yours, how your day typically goes?
See, structurally, our day starts very early in the morning.
Okay.
In some form or fashion, one has to keep aware and keep thinking of what's happening overall in the markets. Though technically, like as a fund manager managing ETFs and index funds, it's not that once I go to the desk, I have to take some very aggressive call or change my portfolio or whatever. But still, one has to be aware of broadly what's happening. Because of that, what kind of flows could come through, or how I need to arrange my portfolio. Is there any unique events happening in the markets which I need to be aware of?
Okay.
Then our day typically, during the market hours is very, very hectic basically,
Okay.
where we are constantly tracking the portfolios, trying to take a sense of how the flows are going to come. In ETFs and index funds, the portfolio management style is very, very important, that we need to have eye for detail. Every single rupee to match and make sure we are as closely aligned as possible to the underlying index.
Yes.
So today we believe at our end that we are amongst the very few players, we adopted a global best practices, that we have a separate investment vertical for ETFs and index funds.
Okay.
Many of the other players have a common vertical. Within that, one or two people are there who are focused on that. So we focus on this specifically. So our day is very hectic. 99% of the time, lunch is also in the dealing room only. We just go up to heat the food and then come, and we are having the lunch while trades are going on. Our screen is being watched. Reason being that suddenly some news might come, and we need to be immediately taking certain actions.
Okay.
For example, we are very actively involved in SLB, securities lending and borrowing.
Okay.
So let's say today, even on your platform as a Dhan platform, many retail investors who have got surplus securities lying in their demat account, they can participate and lend the securities in the SLB market. And earn little bit extra income on their idle stocks. Similarly, we also do that. We have stocks lying, but we need to be very alert and very fast.
Correct.
So whenever there is any reverse arbitrage opportunities happening in the futures and option market, there will be a natural demand to borrow those securities. So just say we see some news flash, suppose which is having some negative news on some company, immediately we are there to give our securities in lending at high rates. But if we are not there in the desk, or we are not alert at that point of time, maybe that opportunity of which was there for 5 minutes has maybe gone, and then again rates are less. You will be able to lend the security, but that you will not be able to catch the high level of the margin.
Great.
So sometimes day becomes a little bit hectic, stressed. So, but it's very interesting. It's fun to track what we are thinking in the morning, how we are seeing the overall markets, connecting that with the real world on ground, seeing how flows are happening, seeing how stock specific movements are happening, and based on that, ensuring that our portfolios are as closely aligned as possible to the index. And what I like to do is that after close of the markets, just take a short break, unwind, and then sit back to reflect upon some new different strategies, what has happened during the day, certain other things which we can work on. Let's say, for example, to strategize how in some simple way I can communicate to my investors or to my potential investors about what is going to happen, how they should do, what they should do with their money. So today you were kind enough to call me to discuss about some ideas.
Pleasure.
So for that also, one needs to be clear that how to maximize the use of your platform to communicate in a simple way to your users or to your investor, how they can benefit. So there is something then we keep thinking constantly towards the end of the day, that how I can create a kind of a unique area of communication which can benefit investors, something of that sort.
No, that's so great. So we have got a sneak peek into the life of a fund manager. It may sound that they look after passive investing, but the effort which goes behind it is very, very active.
Absolutely right. Absolutely right. So there are, just on the lighter side, certain days where some 1 or 2 person, by and large in my team, they are not even able to go for lunch during the market hours, and at 3:30. So I also scold them, nahi boss, aisa lage to make sure you have a lunch at 12 before too much action starts in the market. But yes, otherwise it's not like sometimes, on the lighter side, many people say, अरे अनिल भाई आप क्या करते होंगे दिन भर में, आपको तो इन्वेस्ट कर लो, आप डेस्क पे बैठ के कॉफी पीते होंगे, and you just press a button and some algo will be doing some trades. But it is not as simple. Many people say that I have to also do passive investing, buy index. Why will I give money to, let's say, your ETF or your index fund? I will buy on my own.
Yes.
I said, okay, go and do it. Try for 2 days.
Yeah,
So it's not so easy to.
No, I fully agree. So algo is just an outcome of somebody's logic and thought, right?
Yes,
So
yes.
there has to be a brain behind an algo,
Yes,
right?
absolutely
So
right.
that's
Yeah,
true.
yeah.
So Anil, no, before we wrap up, just wanted to understand what do you do? So see, on the weekdays you are very active. There has
Sure.
been a lot of things on your table to look into.
Right.
How your weekends or holidays generally go like?
From my side, I always like to have a good, balance even on weekdays. I try my best that, okay, later in the evening, I can have some time, personal side to unwind, relax. In the mornings, by and large, not every day, I must admit, but I'll try to spend a little bit time to do some, personal exercise, some, breathing exercise, some yoga, something like that.
Okay.
But at least on weekends, I try to ensure I go, like for me, my physical exercise routine is going for swimming.
Okay.
Or on certain period like today, we are in winters, I go for kayaking.
Okay.
That's a good exercise, light exercise. And while doing that, one can unwind and think about, different areas of life, how you are able to connect the dots. So I feel that is something which I urge all of the users or viewers of this session with Dhan, that try to ensure in whichever profession you are, or whether you are in investing as a profession whole time, or you are in some other profession and investing part time, try to carve out some time for yourself. Okay, for me it's fixed that on Saturday and Sunday, first half I will be away in my club, either in swimming or in kayaking. Something like that. So then you get to have some me time where you can think about other areas and have a good way of connecting back to the your professional life.
That's wonderful, wonderful. So to our listeners, if you can, I think you read a lot, right? So any books you would like to recommend for our audience?
Sure. So like just recently, or I'll connect dot with what we spoke earlier about, how you should look to meet the market rather than thinking of beat the market. So there is one book which is very popular. Many of us as students or early in our career we must have read, called The Intelligent Investor by Ben Graham, right?
Yes.
It's the so-called like Bible of
investing
world, of learning about a company balance sheet and all. And about 2-3 years back there was a new edition for that also. People might have read it. But little bit similar to that, there is another book called The Aspirational Investor.
Okay.
It is written by a gentleman, Ashwin Chhabria, based in the US. He was the CIO of Merrill Lynch in US.
Okay.
And there he writes a lot about his behavioral finance.
Okay.
And this theme or idea which I spoke about, that look to first meet the market before you think of how to beat the market. I had in fact picked up from his book over there basically.
Okay.
That as a like lay investor or a professional, like a doctor basically, what we spoke. Your worry should not be about chasing the next star manager or some big stock which will become multi-bagger. Yes, that is also important.
Correct.
But unless that is your day job or your core profession, you don't worry about that. You meet the market and focus on how to meet your financial goals with a reasonable level of certainty.
Exactly.
For the rest, you focus on your area and let your discipline reach you to that goal. This is a good book, little bit old book. So many of you, if you might have read it, but otherwise it's interesting to read. And one book I was just like reading last week. It got released very recently. New book, not specifically about capital markets, but it's about, because your viewers on Dhan platform, many of them are young professionals, young friends. It's a book by a gentleman, Karan Bajaj.
Okay.
He was the founder of his Whitehead Junior.
Okay.
And he's written this book called The Freedom Manifesto. I in fact just did a small review of that and posted it on my LinkedIn page. So if anyone wants to read it, you can go there and see. And it gives a very good way of how to think of your life in terms of your professional career. And if you feel that, okay, maybe I'm not finding good purpose of what I'm doing in my life. Maybe you have a passion to create a new startup venture or, to set up your entrepreneurial journey. What all areas you need to be aware of in a very simple step-by-step 7 rules he has prescribed, how to work on that. And that includes some very interesting aspects of personal finance also, that while you are taking your entrepreneurial journey, how you can plan for your personal finance, how you should invest your capital. So it's a very short book, recently released just like 1 week back. Openly available on like all the platforms. So I urge young professionals especially to read it, whether you are in a job you can maybe do something different and excel in your job, or if you're looking to set up something entrepreneurial venture and leave your job, of course, I'm sorry if your employers or your bosses are listening, I don't mean it that way, but in case you're planning, it can be something useful for you.
Okay, that's great, yeah.
And for some other reading on weekends, I urge, Dhan also has a very unique platform, many interesting educational awareness things and all. You have a new platform called this Upsurge. I view it sometimes, good content. So some of these online digital content also nowadays are so effective and powerful. So you can definitely consider using that.
That's great. So we can continue for hours. So
sure.
A knowledgeable person like Anil, it's always a pleasure to interact with him. So thank you so much, Anil, for taking your time out and making this happen for us. Really appreciate that. Thank you once again.
No. It's my pleasure. Thanks a lot for having me with you. For us, I mean, Dhan is a close partner. We would like to engage in whatever way possible, and more important than that, through this medium of your series, you are doing a great job by bringing to end users of your platform, simple and easy to understand, implementable tips. So in that part, wherever possible, it's really great to be associated.
It will indeed be our pleasure.
Great.
So thank you, everyone. I hope you'd find it very insightful. Thank you once again.